Hello everyone, this is Across Univer. In recent years, the Indian stock market has attracted millions of retail investors due to a significant surge in stock activity. Since 2020, the Indian stock market has reached multiple historical highs, maintaining a strong upward trend. Currently, the market capitalization of the Indian stock market exceeds $5 trillion. Analysts attribute this growth primarily to the active participation of retail investors. Since 2020, the number of retail investor accounts in India has more than doubled, reaching approximately 160 million. Among young people, there is a growing trend of frantically buying stocks and options. What was once a quiet market is now bustling with investors dreaming of overnight riches. Some analysts worry that the valuations in the Indian stock market are too high, posing a risk of a bubble burst. For decades, the Indian stock market was considered relatively closed and lacking vitality compared to major markets like the US and Japan. However, recent years have seen dramatic changes, with an epic bull market unfolding, turning this once unremarkable market into a significant player in the global capital markets. Over the past 5 years, India's benchmark Nifty 50 index has more than doubled, outperforming major global stock markets. In the past 3 years, the MSCI India Index has traded at an average premium of 58% over the MSCI Asia, excluding Japan Index. The stellar performance of the Indian stock market has increasingly attracted overseas investors. In May 2024, the average daily trading volume of Nifty 50 Index futures surpassed that of the US S&P 500 Index futures. The lucrative returns from this strong bull market are drawing more and more retail investors. According to HSBC data, since 2020, the number of investor accounts in India has more than doubled, reaching approximately 160 million. In May, the net assets managed by the mutual fund industry doubled to 59 trillion rupees, $706 billion. Many young investors, eager not to miss out on this get-rich-quick opportunity, are learning to trade via social media and online platforms, using low-cost derivatives for speculation. Research by Ashish Gupta, Chief Investment Officer of Axis Mutual Fund, found that the number of active traders in the Indian stock market surged from less than 500,000 before the pandemic to 4 million last year. Most of them are under 40 years old and come from small towns in India. Why has there been a surge in stock fever in India? Analysts point to several reasons for the influx of retail investors. Firstly, India's economy has grown rapidly in recent years, and the capital market has modernized, with the introduction of online trading, centralized clearing, and electronic stock records replacing easily forged paper stock certificates. In 2024, the Indian stock market set multiple historical highs, continuing the strong rebound from the previous year. The sustained upward trend of the frontline indices over the past 3 years is mainly due to the active participation of retail investors. The rapid growth of the Indian stock market has also significantly impacted existing domestic electric vehicle manufacturers, especially with Tesla's market entry, intensifying competition with domestic brands. Some analysts express concerns about the rapid expansion of the Indian market and speculative behavior. They warn that the high premium of the MSCI India Index poses a risk of a speculative bubble. Many Indians still face high unemployment, stagnant wages, and a widening gap with the wealthy elite, making high-risk, high-return stock investments more appealing. Zero-day options, derivatives that expire on the day of creation, have become the hottest investments in the market. There is a lot of speculative activity. It sounds like a casino, said Ramdeo Agrawal, chairman of Motilal Oswal. People are really selling puts and restructuring calls. It's crazy. The accessibility of cheap options, supported by leverage, offers high returns for low expenditures, but also amplifies the risk of losses. Gupta describes this as the gamification of the stock market. He believes that retail investors in India often lack investment experience and do not fully understand the risks of options trading, increasing the risk of a market crash. However, some analysts remain optimistic about the Indian stock market, believing there is still significant growth potential, particularly among the middle and upper classes. Despite the number of investor accounts reaching approximately 160 million, only 7% of Indian households hold stocks or mutual funds, according to asset management company Poland Capital. This indicates that many households have yet to enter the stock market. There is always a risk of adjustment, but the benefit of this is that it provides an opportunity to increase positions in what you believe in, said Andrei Stetsenko of Farley Capital. If you enjoy my channel, please like, subscribe, and hit the notification bell. Thank you for your support, and see you next time.